What's up, investors? It's the Russian dude. To begin with, right here is the list of companies which are reporting this week. Feel free to pause the video to see if any of your companies are doing earnings reports. Right, to begin with, let's talk about once again high inflation risks which are returning, and the stock market which is facing so-called quote-unquote disappointing negativity by the end of this year. Exactly what it means and what made me think about conclusions like this. The very first graph, it shows that the Dow Jones Industrial Index recently reached 40,000 points, the highest in its history, but this happened during this lowest point in economic surprises, which basically means that a lot of economical factors and economical parameters were coming way below expectations. So you might ask then why the market is going up. Well, according to this next graph, and some of you already know it, the S&P 500 and, well, at this point the Dow Jones Industrial Index itself, the performance of those two is heavily related to the Magnificent Seven companies. These are basically the biggest companies on the US stock market, such as Amazon, Microsoft, Google, you know all of them. And according to analysts, if you only subtract these 7 companies from the entire S&P 500 index, which leaves obviously 493 companies, then instead of S&P 500 growing by 5.4%, it will lose 2.4% of its value. Just guys, think about it. Instead of 5% growth, there will be almost more than 2% decline only if you subtract 7 companies out of 500, which kinda tells you that 99% of the stock market is not doing as great as these 7 companies. Besides that, at this next graph, once again we can see that the economic surprises are declining, which basically once again means that a lot of reports coming below expectations, except the only one, the inflation report, which are in return coming above expectations, meaning that the inflation is either not budging or slowly budging, or at some particular sectors of the economy are increasing once again, such as, for example, the most noteworthy is the real estate market. Besides this, according to this next picture, American and world bonds yields and returns are increasing. And guys, if you already know, usually on the stock market, on the bond markets, whenever stocks are demonstrating better performance, bonds are usually undervalued. And then the opposite happens. Whenever bonds, they start to shine through. This is when the regular stocks, they kinda underperform. Well, as you can see now, the situation is changing in the opposite direction. We can also never forget the literally apocalyptic situation with the US government debt, which just in interest payments alone recently crossed way above $1 trillion. This is, once again, $1 trillion we're talking about that America literally spends on thin air. These are not the money which are used in research and development, in increasing the productivity to support. No, this is just to support the debt alone. As a result of this, a lot of analysts, they predict a not so good next few upcoming months, or how they call it, disappointing negativity, and they also do not see that even though quarterly reports might beat expectations, but annual reports might actually not be as good as expected. Basically means one of the potential reasons for this is once again high unbudging inflation, high interest rate environments, and still relatively increasing unemployment. Once again, perfect recipe for stagflation. And so whenever there is such an uncertainty in the economy, people usually tend to switch to some alternative investments, including commodities. So we're gonna talk about all of this right now. But guys, before we proceed, if you do like this style of daily stock market news, can you please simply like this video and subscribe to my channel? Helps with my work a lot. Thank you so much. And so yeah, we begin by talking about one of alternative and very controversial investment, the cryptocurrencies. First of all, according to this graph, you can see that the bull sentiment in regards to Bitcoin and Chainlink started dramatically increasing recently. Bull means the uptrend in very basic understanding. Next graph shows us the number of Bitcoin whales, and also, as you can see, in the recent days they started to increase. And the next graph shows us the Bitcoin regular holders, just like, one-time temporarily investors who buy Bitcoin, they do not see 10x growth, they sell it. Well, as you can see, according to this graph, they started to capitulate. And historically, this was usually happening right before at least some kind of small growth or even big growth, because you always know how it happens. Whenever you sell in your investment, it always goes up. Another interesting graph shows that the inflows into Bitcoin ETFs last week alone reached $932 million, almost $1 billion, which is a significant increase from previous weeks. And as a result of all this, Bitcoin price temporarily breached more than $70,000, at least at the moment of recording this video. And then some other technical analysts, once again, as long as you believe in technical analysis, they started to see that Bitcoin, after halving, entered this zone of potential skyrocketing growth. Historically, this is exactly what happened in the previous 3 halvings, so let's see if the situation will repeat itself in the 4th one. But ultimately, there is one more investment that people were selecting for thousands of years, whenever they were extremely uncertain about what's going to happen in the near future, and this one is gold. First of all, as you can see from this graph, which is a very interesting one, and to be honest, it caught me very unexpected. Long story short, what it shows is that a lot of institutional investors, they do not favor any more gold ETFs and gold funds. Instead, they buy actual physical gold. The next graph shows the central banks around the world purchasing gold for their national reserves, and as you can see, for the last 3.5 years, these purchases were way higher than average for the last 14 years. I mean, these are central banks, these are the smartest among the smartest people in the entire economical world. They wouldn't do these things for no reason, right? But the next graph is even more interesting. Once again, it shows the history, the correlation between gold performance and Federal Reserve increasing or decreasing interest rates, the exactly situation which we're going through right now. And for more than last 20 years, as soon as the Federal Reserve started to decrease the interest rates, which is the event we might see in the near future or we might not. But historically, once again, for almost quarter a century, as soon as they start decreasing the interest rates, this is when the price of gold goes up significantly. But as always, guys, please never make your future decisions based on past results, because stock market, commodities market, bond market is unpredictable. If we had a crystal ball, every single one of us will be a trillionaire at this point. All this information presented in this video is just for educational and research purposes. Please always make sure to do your own research before investing your money. And as always, thank you so much for watching. Please like this video, subscribe to my channel, and see you tomorrow.